Hello everyone, this is Joseph and you're watching Wealth Commit, where we're committed to helping you building credit and wealth. Today I'm actually going to go over Opensky Secured Credit Card in 2020. And if you're new to this channel, go ahead and subscribe and hit that bell so you get notified anytime I drop a new video. And if this video does bring you any value, go ahead and hit the like button as well. So in this video, I am going to actually go over all the pros and cons of Opensky first. Then I'm going to kind of compare them to other cards that are out in 2020. I might take on if Opensky is even a good idea to go with. That's going to be towards the end of the video. Let me go ahead and go over the pros and cons of using Opensky first. Alright, so let's get right into it. With Opensky, it does report to all three credit bureaus. There's no hard inquiry, and there's also no credit check, so pretty much anybody can get approved for it. So let's kind of break that down when you get approved for Opensky Secured Credit Card. The first thing when you get approved is they're going to be expecting a security deposit. The minimum security deposit is going to be $200. The most you could put is about $3,000. I'm sure you could put more, but you would have to reach out to their customer support and go through that whole process. But on minimum, it's going to be either $200 to $3,000. You can go anywhere in between. It could be $200, $300, $400. It's really up to you. And you got to also take into account using the credit utilization. So that's going to be another factor into how much you use. So if you do the minimum of $200, really you don't want to spend more than $18 in order to have perfect credit. Reason being, 9% is where you want to be at for credit utilization. So 9% of $100 is $9. So then you double that for $200, which is the minimum. That's the most you really want to spend if you want perfect utilization. If you want good, you could do 30% or less. That's what everybody usually tells you to do. But 9% is when you're reaching that perfect range. And this is where you want to be whenever you're building credit. So always keep that in mind, is you really don't want to spend more than $18 on a $200 secured credit card. Another thing about the security deposit is once you pay it, you're not going to get it back until you close the card. So say you have the card for 3 years. You're not going to get that money back for 3 years until you close the account. If you keep the account indefinitely, then you pretty much never get your security deposit back. Opensky doesn't have the option to graduate to a non-secured credit card. All they offer is this secure credit card in order to help you build credit. So not only are you not going to see that security deposit until you close the account, they also charge an annual fee of $35. So every year you are going to be charged $35. So to put into perspective, before you even use the card or before you even do anything, it's already used $35 out of your $200 limit. Your security deposit's gone. That $200 limit's there. Then they take off $35 from there. So you already technically spent $35. So the first month you have it without ever swiping or spending a dollar, you already are negative $35 for that yearly annual fee. So that's something you want to take into consideration as well, is that you already are negative $35 as soon as you get the card. So you may want to go ahead and just pay that off so that way your balance is zero when it does report to the credit bureaus. If you do have more questions on when you should pay and when it reports to the credit bureaus and things like that, I am going to have a video breaking that down, when you should pay these off. So that way the balance can report zero or you have very minimal utilization when it does report. I'm not going to really break all that down in this video here because that would apply to pretty much any credit card. I'll make a separate video on that, breaking it down, the due date and then the statement date. I'm not going to go too much into that in this video, so let's just keep it moving. Alright, so now I kind of want to talk about the fees that they charge. So on top of that $35 a year fee, they also charge late fees. If you do pay late, it's a $38 late fee and a check return fee of about $25. So say you try to go and make a payment and for some reason your payment didn't go through or your bank denied it, they're going to charge you $25. And let's say you were late and they charge you that $25, the return fee. Now you're negative $68 just for being late paying them and your check coming back. And you do want to continuously pay early in order to avoid any of these fees. Secured credit cards like this do kind of make all their money based on all these fees they're going to charge you in order to try to build your credit. That's why in 2020, it's not really the best option to go with Opensky. A lot of people go with them again because it's super easy. They do no hard inquiry, they do no credit check, and pretty much they're going to approve anybody that actually applies for it. But there are still better options in the market for it. I will get into that in a second. Let me just finish breaking down these fees for you. We already talked about the late fee, we already talked about the check return fee, and we already talked about the annual fee. Not to mention the cash advance fee. So let's say you go to an ATM and you take out $100, right? The cash advance fee is either 5% or $6, whichever is greater. So basically, if you go to an ATM, you take out $100, they're going to charge you $6 for that because the $6 is greater than the 5%. But let's say you go to the ATM and you take out $200. They're going to charge you $10 because that 5% is greater than the actual $6. So they're always going to charge you a fee whenever you do a cash advance, and they start charging you interest right away. If you use a secured credit card or any credit card and you let the balance carry over, that's when the interest starts, but not when you do cash advance. And for most credit cards, they do start charging you interest as soon as you do the cash advance. So it's pretty standard, and the interest rate is actually pretty high. So for the cash advance as well as just interest in general, it's a whopping 17.39 APR. So that's basically what you're going to be charged as soon as you either roll a balance or you do a cash advance. So not only are they charging you that 5% or $6, whichever is greater, they're also charging that 17% as well from day one. So doing a cash advance is probably a big no-no on this card. And using this card, you are using it to build credit, so you do want to stay below that 9%, so that way you're in the perfect range and you're pretty much just knocking it out, or you have a 0% utilization where everything's just pretty much paid off. So you'll use it, you'll pay it off before it ever reports anything. It could be a 0 utilization, which would be pretty much the best case scenario for a card like this anyways, because you don't really want a balance to roll over and get charged at 17%. Again, this is 2020, so Opensky does have a lot of competition. Even though they're super easy to get approved for, again, they do have competition in 2020 because there's other companies that do offer even better perks than Opensky that pretty much is going to kind of put them out of business if they do continue this model. Let's kind of recap going to the Opensky. So let's go over some of the pros with Opensky. There's no credit check. There's no hard inquiries, and it reports to all 3 credit bureaus, so pretty much anybody's approved. That's the biggest pro of going with something like Opensky. Let's go with some of the cons with Opensky. They charge a yearly fee. Your security deposit is pretty much with them indefinitely until you choose to close this account. You earn no interest on that security deposit. So again, it's just with them. Another thing is Opensky doesn't have a card where you can graduate to. And another big factor is the big whopping 17% interest rate. That's a pretty high interest rate, but again, it's not nothing out of the norm for a secured credit card. It's not super uncommon to see such a high interest rate on a secured credit card. It's actually pretty normal. But something you can actually do in 2020, there's different cards you can use, there's different strategies you can use. So if you've been watching the video this long, that's Opensky in a nutshell. There are alternatives. So if you made it this far, you are about to get some game and some gems on what I would do personally instead of going the Opensky route. Alright, so hear me out. This is how I would attack this situation. If I was going to do a $200 security deposit, instead of going to Opensky, I would go a different route. I would do 2 different cards. I would do self-lender. Self-lender, you can do a plan for $25 a month and a $9 to actually just start signing up. Then I would open a Chime account. When I open my Chime account, I would go ahead and connect my direct deposit to the Chime account so I'm able to get the Chime Secured Credit Card. Actually, it's called the Chime Credit Builder account. I call it the Secured Credit Card because that's pretty much what it is. Once you get your payroll tied to Chime, you're able to use their Secured Credit Card. You can actually use as little as $25 in order to open that account. They operate as an open-ended card. I have a whole video breaking that down. The link's going to be right up here, so go watch that video on Chime and their secured credit card. It's a pretty cool card. I would advise using them and self-lender together. That way you're getting more trade lines being reported and you're not stuck with Opensky, because Opensky, in order to pay, you have to pay some days early and you have to hope it meets the deadline. If you don't meet the deadline, fees start getting tacked on. These are some tactics that some of these secured credit card companies are using. You can also use self-lender, Chime, and then you could throw something in there like My Jewelers Club, which I do have a video on that as well. The link is going to be up here for the My Jewelers Club, and that's how you can get $5,000 revolving credit. So that would be 3 different trade lines if you went that route, and that would all be for less than $200 to get started. I will make another video breaking down this strategy altogether to using these 3 companies where you're getting 3 different trade lines to report. That would be too much to break down in this video because this video is, again, for Opensky, or review on Opensky. This is just my take on what I would do rather than going to Opensky route. And I do have videos, and links are in the description below as well for all the companies I mentioned. I have done reviews on, and you can kind of figure out, you know, which companies are going to work best for you. If you are new to this channel, just make sure you subscribe and hit that bell so you get notified anytime I drop a video. And if you did get value out of this video, go ahead and hit the like button and share this. Share this video if you did get value out of it. Come on. On that note, I am out of here. I'm going to see you in the next one. Thank you for watching. And again, I am dropping a video every day. So if you want to see anything, go ahead and leave a comment below. Leave a comment below and I will drop a video. I'm going to see you in the next one. Alright guys, thank you for watching, and you already know the drill. I'm going to tell you to go over there, subscribe below, hit on my face and hit the subscribe button. Then we're going to go this way and watch the next video. That's how we're just going to hold it down over here. We're going to keep supporting. We're going to watch every video. Next video over here, we're building credit. We're building wealth. That's just what we're doing, man. Come on, man. You know the drill. Go this way after